we'd like to welcome all you guys to our first home buyer seminar of 2022. We also want to give you an introduction of us, the whole group. I'm Jody.
I am Siobhan McCormick.
I'm Liz Concha.
I'm Marissa Madrid.
I'm Jessica Ramirez.
John Baptiste.
We're all realtors with KW. Wanted to introduce also our sponsors of the day. We've got Sandy and Gina with Trinity Title. We've got Thomas with Goosehead. And Becky with Gateway Mortgage. Each of them are going to come up and talk to you guys. If you guys have questions, you have notepads in front of you, please write down your question. Don't forget it, because we will want to know all your input and be able to answer the questions that you guys came here, answer the questions that you guys came for. All right, and first I think it's Thomas who's going to come up and get started about insurance.
So hi everybody, like you said, I'm Thomas. I work with Goosehead Insurance, and the reason why insurance is up here is one of the parts of buying a house is you do have to get home insurance set up. Now this is it should be an easy part, but sometimes it can be a little more difficult if you're trying to get in contact with your agent or get different situations set up. But us over here at Goosehead, we're really big on making y'all's life as easy as possible. There's so much other stuff that goes on with the home buying process that we want insurance to be as smooth and as simple as possible. A big thing with us is Goosehead, we're big on education. First time home buyers, or you haven't bought a house in a while, you're probably not too familiar with on a home insurance policy. So when we go through there, we don't just send you a quote and say, hey, do you like it? We go through line by line with you guys, explain what coverage is, what coverage isn't on there, and really make sure that y'all are comfortable from a price versus a premium and what you're gonna pay versus a coverage perspective. If you don't care about coverage, well, obviously I'm gonna recommend you have more coverage than not, but I wanna make sure you're comfortable, okay? So that's a big thing we do is education, and just like he was saying, if y'all got questions at the end or even in the meantime, please let me know. Big on education, making sure that y'all are comfortable with what you're having. But really cool thing that we also do at Goosehead, we actually can get all the utilities set up completely free. So basically what that means, when you get in contact with us at Goosehead, we have a lady on our team, her name's Ashley Britton, and she works with all the different water companies, electrical, Wi-Fi, TV. She can get it all set up with you. My wife and I actually used her last week. We got everything set up in an hour and 15 minutes. Gave her a credit card, she's getting all the payment stuff set up, and she also is gonna set up with an alarm system too. We literally built out the process with her, and she got us set up with Vivint. It was going to be like $55 a month for our Vivint service that we have set up. So it's a cool thing that we can do for you guys, all within the Goosehead family. And also last thing too, we're an independent agent, which means that we can write with Progressive, Travelers, Nationwide, Allstate, all the names out there to truly make sure that y'all are in the best spot possible. So if there's a product out there that's going to fit you, we're going to make sure that we put you in that spot. So that's pretty much what we do at Goosehead. One thing on the back of my business card that I set down is a QR code. And the cool thing with that one is you can actually fill that out or that link on that piece of paper, and you'll get rates back for what home maybe you're looking at or the current home you're living in right now for what insurance might cost you. And if you have questions on that, it has my name and number on it as well. And also shoot me the information. That way I can give you a call and kind of finalize those options that you see there as well. Last thing too is going to be on that sheet of paper. There's going to be basically frequently asked questions that a lot of clients, really just the basics of home buying with insurance. Obviously I'd love to be your insurance agent, but if I'm not, I at least want to make sure that you're going to be taken care of. So that's the basic stuff on there. And like I said, my name is Thomas. Love to help out if you got any questions at the end of the time. So thank you guys.
Hey, Thomas. I got one question for you guys. So, for someone who already has a home, maybe, like even for some of the agents, like how often should they, check their, you get the renewal, you never even look at it, but.
Yeah, it's a great question. So what I recommend our clients doing when we sell someone a new policy, we recommend them calling us. I mean, honestly, if you want to check every year, you're more than welcome to, but typically we see insurance rates jump up every 2 to 3 years. It's kind of that happy medium. Most companies, they're going to lock you in for that first year with a great rate, really not going to bump you up that next year. However, by year 2, year 3, that's when you're going to see maybe a 20-30% price increase. And the cool thing is, if you are with us already, actually when we see our renewals coming in, we actually get alerted if there's an above a 10% increase on your premium, and we can reach out to you and say, hey, it looks like your renewals are going to be much more expensive. Let's go ahead and do what we call reshop to make sure you're in the best spot. But to your question though, if you haven't reshopped your insurance in the past 3 years, I'd love to help you out and at least see what options are out there. I know loyalty's big. I'm not going to pressure you to buy something, but loyalty's probably not worth $150 a month if I can save you that much. So, great question though. Any other questions on that or something else? Cool.
Hi, you guys. I'm Gina Taylor with Trinity Title, and I don't know, does anybody know what title insurance is? So when you buy a home, you want to get title insurance. So I'm basically an insurance salesman, just like Thomas. I just sell different insurance. So what we do is our insurance ensures that you have clean title to your home. It means there's no other liens out there, abstract judgments against other sellers or previous owners. And also we get you a survey, we get you that outline of your property, and I'm the last person you see when you close. So you'll see me last. Title insurance premium is set on sales price. So whatever your sales price is, that's what your insurance will be. So really it's kind of boring. Do you guys have any questions about title insurance? Because I can sit here and talk all day and you guys go, what?
In your packet, there is the definition of title insurance and why you need it. And it's a one-time price. It's something that you should pay just one time.
Yeah, it runs the,
So
as long as you own your home, you have title
it covers you
insurance.
on everything. So anyway, title insurance is important. In fact, you really don't want to buy a house without it.
You don't.
Period.
Even if you're paying cash, you want to make sure that you get a clean title to your home. You don't want somebody's heirs knocking on your door and saying, hey, you're in my dad's house, I want it back. You know, so we take care of all that for you. But
And at the end of the day, she's gonna be your favorite person because when you finish signing with her, you get keys to a house. So
Yeah.
We give you the keys.
So it may feel like a long, drawn out process, you know, when you're looking for a house and trying to get there, but once you're at the table, it's your home free. So, and we'll take pictures afterwards. It'll be fun. All right.
Thank you. And now to talk to you guys about mortgages or lending will be Becky.
Everybody should have a buyer's guide. If you want to pull that out and kind of go through that. I have a sore throat, so I'm sorry. Can everybody hear me?
Yeah.
I'm Becky Ryder with Gateway Mortgage. I have been a lender for almost 20 years. So, did everything, and I just want you all to know that it's all going to be okay. These rates and the market, it's going to be okay. I strongly encourage you to buy a home. I mean, people that bought homes back then they're living the good life now. So, it is a really good time to buy, no matter what somebody tells you. We'll go to page, the value of home ownership. So you do get tax benefits, and I just have to disclose I'm not an accountant, so I can't tell you exactly what those are, how much you would get, but your mortgage interest, and then I think also when you buy, what you've paid at closing is, anyways, it's good for tax benefit. Equity, in this market, you can buy a house today and you probably have 10% equity tomorrow. I mean, it's crazy. I heard a statistic that from 2020 or 20 a year ago, 12 months, past 12 months, that the prices here have gone up almost 25%. So that's some good equity. It usually only grew like 3% was the previous average, 3 to 7% on its own. So that's great. And then obviously it's a long-term investment. So you know, if you're a first-time home buyer and you're buying, this is your home, I mean, it's totally acceptable if you want to convert that to an investment property and then buy a bigger home when you're ready. I mean, there's lots of ways to make money in real estate. And then obviously the personalization after. Everybody loves that. Right. All right, so then the next page is the loan originator. That's me. So I strongly encourage you guys to talk to a loan officer. If it's me, I would love it to be, but talk to somebody about your options. You know, we come up with all kinds of ideas to get you into a home, or at least set you up with a plan to get you into a home when you're ready for it. The real estate agents, you met all of them, wonderful people. The loan processor is who works for me, and they order an appraisal, order title. You know, when I get conditions from you, and conditions are like, if I need a pay stub from you, I'll give it to my processor and she'll give it to the underwriter. And the underwriter is the one that makes the decision on your approval or not. So, I hate to get too far into it, but when we start, we run your file through an automated underwriting system as AUS. And it goes through all the Fannie Mae and Freddie Mac guidelines. And it spits out a list of things that, in order for to have an approval, you have to have this. So it'll be like, 2 years of W-2s, 60 days of bank statements. If you have collections, it'll tell us what collections need to be paid off. So that underwriter, all he's doing is going through that list of, and making sure that we've met all those rules and guidelines. And the appraiser is the one that will come out and appraise your property to make sure that it meets the value of the purchase price. So if it does not meet the value of the purchase price, then that appraised value now becomes the purchase price. But that doesn't change your contract price. So let's say you're buying a house for $250,000 and it only appraises for $240,000. You now have a $10,000 gap that you have to come up with if you sign an appraisal waiver, which means that you're going to pay it, which a lot of people are doing in this market. You probably wouldn't be doing that as a first-time home buyer. So, but that, it is an option that if you really do want the house, you can pay above appraised value, but you can't get a loan for that part. The home inspector, definitely, I think every realtor in here will want you to have a home inspection on the home that you're buying. They just make sure that everything's okay with the house, plumbing, foundation, roof, all that kind of stuff. And then you just heard from title and insurance. All right.
Can I ask a question, Becky?
Yeah.
Why is it so good as far as aspect on loan-wise, why we suggest all clients to get a home inspection? What could happen if you don't?
Well, for me personally, my husband is very, he knows everything and he's handy, and he really does know everything. He can fix anything. He can do cars. And we didn't do a home inspection on our house when we came and bought. And did the inspection the night before, and I kind of noticed that it was kind of hot downstairs, but I was like, I could hear the air running. And we bought it the next day, and guess what? The air conditioner was gone. I mean, it was the fluid inside of it, whatever that's called. Yeah, it was gone, and it was the old style, so I mean, it was a mess. It cost us a lot of money. Whereas I could have spent $500, $700 to have an inspection and had the seller pay for that.
Right.
I did get a home warranty though, so that helped a little bit. But it was still a very expensive mistake on our part. I mean, just get the home inspection. All right, so then we're on this page with the list of 1, 2, 3. So we've kind of talked about getting pre-qualified is kind of like, for example, you said, hey, I wanted to buy a house, I make this amount of money, I have $100,000 I can put down or whatever. Do you think I could get pre-approved? And I'm like, yeah, sure, of course. Pre-approval is actually you fill out an application, we check your credit, we actually verify your pay stubs, your bank statements, we make sure that everything on that application is correct. So that if you go under contract, we don't have any surprises. So you definitely want to get pre-approved. We also have the option of going through underwriting before you have a property, which I strongly suggest if anything's questionable, like if your debt to income ratio, which we'll learn later exactly what that is high, then we would want to make sure that it's ran through to make sure that the underwriter's going to accept it. So if you work with a lender that's not me, you might want to ask them if you can be run through underwriting as well for your pre-approval. And then start your search, which you would contact your realtor, make it an offer. This is kind of your guys' stuff. Once you guys are under contract, which means that you've negotiated a sales price, you found the house that you want, everybody signed, I get a copy of that contract, and then we're going. We're ordering appraisals, we're ordering title, that's probably once you're under contract, it's probably the most stressful 3 days out of all of this, I would say. Because I'm asking you for stuff, because if we proved like 60 days ago, I need updated bank statements and pay stubs and all that type of stuff. If there's something with the home that's different, like, now you've bought a home that has a well or something like that, and we have to do some different things with that for the loans. Sorry, I just lost my train of thought. So yeah, that's the hard part of the loan process. It's the first 3 days. You're going to feel overwhelmed. I'll tell you that. You're not going to like probably your loan officer at that point, because you're like, leave me alone. But we can't leave you alone because there's short time frames for closing dates. And it really does, on average, 30 days is probably about the minimum to have a mortgage completed. Because it takes time for title to get done, it takes time for the appraisal to get done. And it takes time for, I mean, I love y'all, but you're not my only file, and you're not my underwriter's only file. So like, we can't just push yours forward if you don't get us a pay stub for 3 weeks and you're closing a week later. Because your file hasn't even probably really gone anywhere. So I encourage you that when your loan officer asks you for something, please, please, please get it to them as fast as you can. And I don't mean like leave work and go get it, but just like, within 24 hours is great. Unless they call you and go like, 911, I need this now or your loan is not going to close. Believe them when they tell you that. Your loan will not close if they say it's not going to, if you don't give them that document. And then the homeowner's insurance we talked about, scheduling closing, and you'll hear a lot the CD. So the CD has to go out, which is the closing disclosure, which is all your numbers, like how much you're going to bring, sales price, all the fees that you're having. As a lender, we have to send that out to you within 3 days of closing. So if we don't have that clear to close, a lot of lenders won't send out a CD if you don't have it clear to close. We will send out an early CD. The numbers aren't accurate or anything. You sign it, and that triggers that time frame for the 3 days. So just be aware of that. Like, if you haven't, it's just good to keep it in the back of your mind. Like, it's 3 days from closing. I should have seen my numbers by now. Why not? And then get the keys to your new home. All right. Preparing for your credit for mortgage. The Credit Karma and all those, they're not accurate to what your actual credit score is for a mortgage inquiry. We pull all 3 bureaus, Equifax, Experian, and TransUnion, and we use the middle of those scores. And so what that means is if you have like a 700 and then 653 and then a 683, we're going to use the 683 because it's the middle of those 3 numbers. Does that make sense? With the market the way it is, the economy, credit is to go conventional financing, which is, we'll go through all that. You need to have higher credit scores. They're really not accepting the automated underwriting system that we talked about earlier is not accepting lower credit scores. So, again, if you really want to dream of buying a home, I would contact a lender right away, see what your credit is. Like me personally, I can put together a plan for you, what you need to pay off, what you don't need to pay off, if you need to take out a new credit card to establish credit, in the time frame that it will take to get there. So we can put it out, immediately, 30 days, a year. I mean, we can time it out. So don't be afraid of that. I mean, don't be afraid to have your credit ran and have somebody look at it. It's not, we're kind of like doctors. We've seen it all. Like, so don't be embarrassed on anything. And then don't make any large purchases, and don't, like, if you have a credit card that there's $1,000 on it, and you're listening to your loan officer, you're not spending the money unnecessarily or anything like that, but yet you went out on town one night and spent like $300 or something like that, I don't know, and you put it on that card, that could affect your credit. So just leave your credit, like, put it in the freezer and don't use it at all. Just make sure the payments are made on time, and that's the most important thing. And also, you wouldn't think, but canceling a credit card does hurt your credit because that shuts down available credit that you have out there. The next one on 13 is lowering your monthly expenses, and those are all good ideas when you're buying a home. But I joke with some people that are really tight on the money, and I'm like, looks like it's ramen for you for the next 30 days. And then your debt. I don't necessarily agree with the requested credit rate increase because, like, again, messing with your credit could anything that you do with that could affect your score, and we don't want that. And so here's the mortgage definitions. We talked a little bit about the closing disclosure and the debt to income ratio. So debt to income ratio is debt divided by gross monthly income. And that's your housing payment, taxes and insurance, and all your credit cards, car payments, anything that's on your credit. And typically, that you can't go over 50%. FHA and VA will allow you to go just a little bit longer, over. So just keep that in mind when your loan officer is talking to you about debt to income ratio. Do you guys want to talk about house hunting? Because that's,
We'll do that at the end.
yeah. All right, let's go to page 18. All right, here's the different loan options for conventional loans. See, I have a traditional approach to BUDs, FHA loans and VA loans and USDA loans. That just means that the government is backing a portion of that loan. So it allows for more flexibility in approvals because the lender isn't taking all the risk. On a conventional loan, the lender's taking all the risk of you foreclosing on a foreclosure or anything. Construction and rehab loans, we do have, if anybody's interested in the new construction, we do have a 5% down construction loan, and it's interest-free for 12, the interest rate is locked for 12 months, so you could, if you close on your construction loan now, you're gonna have an interest rate today versus what it would be in 12 months, which is probably gonna be a lot higher. A lot of construction loans is 2 times, so you'll close on your construction loan at that, and you'll pay interest only during that time. And then when the home is done, you'll have to basically do a refinance and have a new rate when it's done in 12 months or whatever. So the one-time close is what you want to do if you're going to do a construction loan. All right, the next page, for understanding closing costs. So discount points are what you would pay if you want to buy down the rate. If you're looking online and you see like some rates that are saying, oh, we can get you 3.875 today, no, you're paying like probably 5 points for that, and that would be 5% of your loan amount. So I don't usually put people into discount points because you have to figure out how long they're going to stay there, if it's worth it to buy down that rate. Most people are only in homes, 5 to 7 years. So if you're spending $10,000 to buy down a rate, that's not smart. Recording fees are recording the deed. Loan origination fees, we don't charge loan origination fees, but we do charge a processing and underwriting fee. Appraisal charges, those range anywhere from $500 to, and under jumbo, like $750. And that is a charge that you do have to pay up front as well. Notary fees, attorney fees, and title insurance. All kind of boring. And then we go through the do's and don'ts of closing. So, right before closing, the day before, or even the day of, if it's a later closing, my processor will do a verification of employment for you. Just a quick call and just say, hey, does Jessica still work there? And you want that to be yes. I had a borrower that we did that the day before closing, and she quit. She had quit her jobs 2 weeks before, and she didn't tell me. But she thought that it was going to be okay because it was the same line of work. No, ma'am. I mean, we got it closed because she had her boyfriend. We were able to work it out. But I mean, don't change jobs. Don't. Be honest with your loan officer at all times. I mean, we're not going to be mad at you. We just want to help. We want to get you in the home as much as you want to. So don't be surprised at that call. Every lender will do that. The proof of, so you can get gift funds. If you have a family member that wants to gift you funds, you'll have to fill out, the lender will supply a gift letter for you. You fill it out and where the money's coming from. And we have to show that it came out, and then we have to show that it was given to the title company, like normally in the form of a cashier's check. And then 30 days of the donors, who you're getting the gift from, bank statements too. So it's pretty easy, but at the same time, like if you have a stingy old grandpa that doesn't want you to see his bank statements, then that could cause a problem. Then obviously keeping up with your payments, making sure all your payments are made during the process. Because there are situations sometimes where we do have to re-pull credit, and if you've missed a payment during that time, I mean, you could be 15 days into buying a house, and now you're no longer buying a house because you missed a payment. And then the don'ts, obviously don't apply for new credit. We just talked about changing jobs during the process. And then making undocumented deposits. If you make any deposit that they consider a large deposit, and usually, it depends on the loan program, but usually if it's 1% of the loan amount, or if it's government, then it's based off of your income, like they'll have that as a large deposit. So if you have cash under your mattress, don't deposit that, because we can't use that. Like if you need an extra $1,000 to close, and you took mattress money and deposited it, like, sorry, we can't use that. Now we are stuck. So there's ways to just talk to your loan officer if you have money that hasn't been deposited yet, or if you get a bonus or something, we would just need to see a copy of that check or the paycheck so it all matches. And it has to match to the exact penny too. So if you make a large deposit and you're buying a house, don't like pull out $50 so your deposit doesn't match the check, because then we have to go and get more documentation to show that you took $50 cash back. Just deposit it all and take it out at an ATM after you're done. And then never be afraid to ask questions. And that's for sure. We love questions. That means that, you know, you guys are involved in it, and we're not going to have any problems. The loan documents, this is just kind of an idea of what documents are needed. We've talked, you know, pay stubs and bank statements and that type of stuff. It's all different for everybody, so I'm not going to go through that whole list. And then your closing checklist, we talked about that. Reviewing your closing disclosure at least 3 days before. And you'll have to make sure you bring a government-issued ID to closing so that the notary can notarize your signature. And then you'll get a closing packet. The title company will make you a copy that you take home with you. And I mean, most people don't read all this, but if you are a reader, you want to read every document that you're signing, I would ask your loan officer the night before or the day before to get a copy of your closing package so you can read it before you go to closing. Because no title company wants 4-hour closing because somebody sits there and reads it. And I've had one before, and I was surprised. He was a teacher, and it was closing. It was like at 2 o'clock, and I texted the time. I was like, "Is everything okay?" It was 6 o'clock, and she's like, "We're still here." He's reading every single word. And I'm like, "Oh my gosh!" Because normally lawyers were like, "Here's the package. I'm not even gonna ask. You're gonna read this before you go to closing tomorrow." But a teacher, I was like, "That was so surprising." And it's okay. It's okay if you want to read every word, but do it the night before. And then most importantly, make your first mortgage payment. When I have people that close, I make sure that I email them their temporary payment coupon and with a list of other stuff to do. But just, I mean, you bought a house, you're excited, you're moving, and then all of a sudden it's like your mortgage is due and you're like, crap. You don't want a late payment on your first mortgage payment. So put it in your calendar or on your phone or something too. And then the homestead exemption is important as well, so file that. And you'll get a bunch of junk mail, like a bunch. I mean, I'm still getting junk mail, and it's like important about your gateway mortgage, and you open it up, and it's like, it's not even, I mean, it's just junk. So they make it look like it's from your lender, and it's not. It's not. So just, if you have a question about a piece of mail that came to you that says it's from me, then just ask. Like, I don't want you getting scammed or anything. And then these next few pages are just for after you buy, change of address, notes, and then, like, it's just, if you wanna take this packet out with you while you're looking at houses, you can keep notes and stuff. But that's all. Any questions?
Oh, no, don't go.
I'm not, I'm just getting water.
You said you had a question? Did you have a question?
I do. Like, what, you know, you said it in the beginning, because I think we hear it a lot from our kids, wait, don't wait. And then you say, it's great for the homeowners because the rates go up, but it's scary for somebody to buy because the rates keep going up. And what's affordable keeps
Yeah.
going out.
Yeah.
You know, so how to even navigate that, because, you know, a year and a half ago, we would hear, oh, it's gonna turn around, and it doesn't seem to turn around.
Yeah.
Yeah.
Well, I mean, your interest rate on rent is 100%, so, you know, if you're 5-6 interest rate, I mean, I don't think I don't think we'll get into double digits or anything like that, but I mean, my parents had an 18% loan, and I mean, it's just, we got really spoiled with the interest rates in the 2s and the 3s, and it's like, you just have to have a different mind frame, and, navigating through finding a house in this market, I mean, that's kind of more your specialty, but all I would say is, like, you know, yeah, a year and a half ago, if you could have bought then, you know, you'd be in a better position now. So then it's like, now, a year and a half from now, you'll be where, you know, I don't know how to say that, but it is a tough market, it sure is, and that's why we're having this class to try to help you get as prepared as possible so you have the strong offer.
Yeah, I mean, because when you think about it, right, if you get approved at a 5% rate now, and it's locked in for 30 years, yes, you may buy less house than you could have last year, right? But you're locked in for 30 years. Now, we don't know, none of us have a crystal ball to say that rates is gonna be 6, 7, or 4. But since we don't know, you have to look at the cost of actually waiting. If they do go up, you say, well, I'm gonna wait, you know, and the rates go up. Well, I'm gonna wait for the prices to go down. Maybe the prices don't go down, maybe they do. So you have to really judge what, for you, what actually is the cost of waiting. Because like she said, rent is 100%, and it's gonna go up.
Yeah, that is.
Where your mortgage will go up maybe based on taxes and insurance, but me as your landlord, I'm trying to increase it every year, quite honestly. And you get nothing if you decide to sell. Anything else?
And
That
I think,
answer your question?
Oh, yes.
I think-
She had a good.
No, I had a question about the loan you talked about earlier. So it's really two. One, you talked about construction loans. So if I'm looking into a new build house, do I have to get a construction loan or?
Not if the builder is financing it, so like, was it DR Horton and those bigger ones, they'll finance the whole thing and then you just buy it from them at the end. The construction loan is more for if you're working with a custom builder, and you buy a lot, you build on that.
Okay. And then, what is the benefit between doing an FHA loan versus a conventional?
There's really not much anymore. FHA used to be kind of strict on their inspection, or the appraisal, I call it inspection. So they'll check for like wood rot around windows, porches, and that type of stuff, peeling paint. So they would make that would have to be fixed before you close, and so sellers don't really like to do that. Conventional is more relaxed, they're not gonna care about that really. But most of these homes around here are newer, so you don't have a lot of the issues that FHA had when the homes, you know, you're buying homes that were made in the 50s, 60s, or 70s. So, but people still have that mindset that FHA is bad. Like, don't do an FHA loan, and it's not. I mean, it's 3.5% down. Like I said, it allows for a lower credit score, and it allows for higher debt to income ratios. So sometimes it's your only option, and it's fine. I do a lot of FHA loans. Conventional is tougher. You have to have probably at least 680, 700 credit score. Your debt ratio Definitely can't go over like 50.01, not gonna go. And it actually has to be more around like 45%. So you lose buying power based off of your debt ratio if you go conventional. But sellers like accepting offers with conventional better, so.
And I think we've had this discussion. I think sellers like it because we kind of say it, you know. And I think as agents too, that we have to look at the whole offer. You know, if you have an FHA, you have conventional, she's VA, you know, we gotta look at the whole picture and then guide them as to what's actually best.
And I'll say one thing real quick on that. Having a pre-approval letter from a local lender helps tremendously.
Yes.
Like, so, and Gateway is very well known. So you don't want to work like a Rocket Mortgage or Bank of America or Chase, or correct me if I'm wrong, your offer will not get accepted probably, unless you're the only offer. Yeah, Loan Depot.
Yeah, and the reason for that is, like some people, well, I bank with Wells Fargo, so do I. But at 5 o'clock, when the whistle blows, they're gone. At 6 o'clock, hey Becky, you know, she might not answer the phone, but she's gonna text or send a message. I'm not gonna hear from that person from the big bank till tomorrow. And heaven forbid they go on maternity leave or vacation. Because oftentimes there's very little coverage, if any. So you're like, well, somebody's working, oh yeah, we'll find out and we'll get back to you. That could be days later, so.
I'd like to say something, from a title standpoint, and as just a title standpoint, but in your packet, that is in the Trinity title packet, it will give you, as a buyer, it will give you, FHA, conventional, whatever type of loan it is, and everything that's listed as to who pays what. And so you can kind of look on there, and of course, anything is negotiable these days, but you can look on there and actually see what the buyer is responsible for. So you have some kind of idea as what the cost of a buyer will have from the title side.
You have a question, Jody? You look like you have a question.
Not at this time.
I wrote a couple things down. And these are just kind of questions that I get from a lot of different people, right? So I'm shopping for a mortgage, and you're asking me, you're gonna pull my credit, and I'm scared to death you're gonna sink my credit score. Like, what happens?
It doesn't. It doesn't. I mean, unless you bought a car the week before and they pulled it 100 times, but if that's already hurt you, I mean, there's I believe it's a 15-day window that you have your first credit pull for a mortgage company. You can have other, you can have as many, not as many, I shouldn't say as many, but maybe 3 pulls, and it's not going to affect your score. Inquiry from a mortgage company or like a secured debt is completely different than an inquiry for a credit card, because credit cards are unsecured. So that means that you're, from a creditor standpoint, credit bureau standpoint, you're trying to borrow money that you don't have, versus you're buying a house that has, you can take back if you don't pay it back. So it's not a risk.
They can't take those clothes back, right?
Right.
But they can take your house.
So don't be concerned about it hurting your credit score. And if it does, then I pull a credit simulator and we figure out how to get it back up.
That was gonna be my next question. What are some things that you've done with clients in the past to help them bring up their FICO score?
Typically it's, the credit simulator tells me exactly what has to happen. So it's paying down a card to, if you have a balance of 500, it says pay it down to 112. That's happening, right? Like I'm not.
I don't understand what you mean.
Okay. So I'll tell y'all, I told everybody else, but I'll tell you, I took a drowsy Benadryl, and I meant to take a non-drowsy. So I'm a little, what was the question?
What are some things you've done in the past?
Yeah, so pay it down to like 112. Don't pay it down to 100, pay it down to 112. It's very specific. I mean, that algorithm that they have, that's what we're working with. Sometimes you have to open up a new card. and, you know, charge something on it, but it'll tell you charge $10 on it. It's mostly that, and paying down cars is the biggest one. If you're below 30% of the available credit, that's what it wants for the most part. And it is weird too, because like, I'll go through and like say you have 3 cars and one's Discover, City, and whatever. I'll simulate paying down Discover and it doesn't change your score. But then I pay down City and it changes your score. So however Discover is reporting isn't going to affect your score as much as City is. It's just crazy. It's crazy.
I think that's like FICO is kind of like the kid issue.
Yeah,
No one really knows. And who is FICO?
exactly.
How does it get to judge me?
No.
Not Credit Karma.
No.
right?
No, not Credit Karma, right?
Credit Karma is good to have to monitor, you know, stuff that pops up. I mean, I think it reports accurately to you what your balances and payments and collections and all that are, but it's just the scores are wrong.
I mean, but Credit Karma is really for to sell you credit card offers.
Yeah,
That's really what it is.
yeah.
So they just hooked you with the come get your free credit score. Right.
And I'll kind of vouch off of what Becky's speaking on right now. My husband, when we were in the process for looking, he was trying to build his credit for over a year until he sat down with Becky, and it took him from a year only to 4 months to build that, just based off of what she told him we needed to do. And we were in a house within less than 9 months. So it really does help by when she says it's just those little things that she can change in regards to telling you what you need to do to boost your score up.
So we got a plan of action, once you look at that credit score,
Yeah.
extend it out.
Yeah, I actually give you a sheet that prints out this, that tells you exactly what to do.
Yeah.
Cool.
Anything
Well,
else?
one more over here.
Yeah, what about like being self-employed where the income is not always gonna be the same?
So we go off a 2-year tax return history. So if you are thinking about buying a home, I don't write off everything that you can because you're going to show no income then. Yeah. I mean, I do a lot of self-employed borrowers, so I mean, it's just, and again, if, you know, we're at,
I don't know. Maybe some new.
what is happening? It's like really kicking in right now. Yeah, so just, you know, talk to a loan officer and, you know, we could tell you kind of where you need to be for the price of home, what income you need to show for what price of home you're looking at. But it is pretty strict on a 2-year tax return history.
Now, is that the bank statement loans that you were talking about?
No. So the bank statement loan is going to be basically that you have, and Lita asked me that, I just learned about it yesterday. It's basically you have a lot of assets, then we'll take a look at that. I don't think they even really consider that income. It's just, you know,
Showing
you
the.
have enough assets to cover it for 6 months.
Oh,
As in the price of the home and principal, interest, tax, and insurance
okay.
for 6
As
months.
long as you can pay your mortgage, you can't pay anything else, that's all that matters.
Yes, that's all we care about.
That's it.
And I did talk about it, down payment assistance programs. We have a lot of down payment assistance programs right now. They're kind of going away with how the market's changing so much, but they'll come back down. So down payment assistance, there's several ones. There's TSHAC, which is, it goes up to 6% of assistance. So that means that you'll get 6% of the loan amount towards down payment and closing costs. And it's forgivable, like the day that you're done, it's forgivable. We have Seth, we're the master servicer for Seth Gold Star. It has higher income limitations, but it's forgiven after 7 years. And it's, I think it goes up to 6 too. But not every day is that available for the 6%. It's really weird. So just, if you're doing down payment assistance, make sure that you talk with your loan officer because it's been changing a lot lately. And you want to make sure that you haven't lost your down payment assistance funds. Because then obviously you wouldn't be able to buy unless you got a gift. so. But they're good programs. I mean, typically all you have to do is take an online class to get it.
Yeah. Anything else? Before we let Becky step down and not fall over? All right, let's give Becky.
Thank you, Becky.
And Siobhan, come on up. Let's give Siobhan a round of applause. You're gonna talk about house hunting.
So I'm gonna talk about house hunting. Every agent does this differently, okay? But when you meet with an agent, more than likely you'll do a buyer's consultation. I know when you meet with a group, we do a buyer's consultation because our goal is to make sure we're reaching your goal, right? So you would write down the specifics you want in a home. How many bedrooms, how many bathrooms, location, a type of neighborhood, square footage. Do you like a big backyard? Do you just want a patio? I don't like a big backyard because I don't like lawn care. So anybody that's ever been to my house would know that, it's not pretty in the front because I don't, that's just not my jam. But for you, you may be somebody that likes agriculture and wants, collard greens in the back. I don't know. That's not my thing. So you really look at what you want in a home, and our job is to help direct you in that path. And so we work closely with title, with insurance, but specifically Becky at that point, because she's the money lady. So we need to make sure that we are shopping within your budget. Because if a client calls me and says they're pre-approved for $400,000 and they want to see something for $450,000, I'm going to say, well, when did your budget change? Let's call Becky. Also, when we are doing the home search, so you've done your buyer's consultation, we've gone over your goals and what's best for you and your family. Then after that, we'll set a plan to start seeing homes. So we set you on an automatic search with our multiple listing service. So those are the most accurate homes. So I know people like search engines such as Zillow. I don't like to say the name. But them people, whatiam.com, realtor.com, all those things. But what we are sending you is the multiple listing service. So you'll know when a home is coming soon, when it has closed, all the specific details, because it is put in by other real estate agents. So it's very accurate. Right? It's the source, yeah. It's very accurate. And so that is where you should be looking for a home. So we take you on a search based on your criteria. And so for myself, I only take you to see about 3 to 4 houses in one day, because at some point 3 bedrooms, 2 bathrooms looks like 3 bedrooms, 2 bathrooms everywhere. So it's a lot going on. It's an exciting time and stressful at the same time, because you are spending thousands of dollars in the next 30 days. So we try to make it as specific as possible. We try to make it tailored to your goals, but also not to overwhelm you. So as Becky stated earlier, when you submitting an offer, you do get a seller's disclosure. That is where the person selling the home, they have listed how old the AC, it's based on their report. So it will should list how old the AC unit is, what type of roof it is, how old it is, any repairs that they've done, if they had to file an insurance claim because there was a storm. All those things should be on there, and it should tell you what was fixed and when. Now that is based on their report, so that's why you get the inspection to kind of validate and coincide with that. But for the most part, every real estate agent may do it differently, but the group does it better. How about that?